Good morning and welcome everyone to episode 16 of Mortgage News Live, coming to you from grey but leafy Hertfordshire. I've spent bank holiday ill in bed, so sorry about my voice if it gets a bit croaky, but the show must go on. And thank you as always to our sponsors, MPowered. We have another exciting show this morning where we will be talking about the latest events in the mortgage market and taking a return trip to look at mortgage pricing. In the news, we've seen the Consumer Prices Index rising by 2.3% in the 12 months to April 24, which was down from 3.2%, but it was slightly higher than economists had predicted. The fall was not as much as expected, and the sticky service side inflation shows that the UK is still an inflation nation, which will cause a pause for thought before the Bank of England finally cut interest rates. That expectation of the first rate cut has now moved back to mid or end of summer, and all eyes are now on swap rates to see the market reaction. As it stands, swaps are still annoyingly high, with 5-year money back over 4%. More on this later. But of course, the big news is the election is now set for July the 4th in an astonishing gamble by a Prime Minister now trying to scare everyone to vote for them. National Service, anyone? What effect this has on the housing market will be interesting. And does it mean a rush to buy before the election or a wait and see approach by buyers? A new government could, of course, influence the market both positively or negatively, but I suspect that whichever party forms the next government, there will be not too much of a difference, certainly not immediately. Those that adopt a wait and see approach could end up paying more in stamp duty, as an example, or if stamp duty is cut and there is a release of years of pent-up demand, end up paying higher property prices, especially in high demand areas. But enough of my cacophony of comments, and over to this week's expert panel. Joining us are Imran Hussain, who's a director at Harmony Financial Services. Hello. Sonia Matheru, senior mortgage broker from The Mortgage Mum. Welcome back.
Thank you. Good morning.
And delighted to also have Peter Stimpson, the head of products for MPowered Mortgages.
Good morning.
Welcome, Peter. Now, look, this is a bit high today. Let me just put that. So let's get straight into it. Inflation has fallen, but swaps have risen. So are we now in a sort of a holding pattern where rates are concerned? Or do we think that something will give shortly and maybe the next inflation report will be a catalyst for reduced rates? Peter, how do you see all this? And how are you guys pricing now in this mad arena? Did you expect swaps to increase yet again?
Well, I think if you start where we started at the beginning of the year and have a look at where swaps have gone, it's been a series of just disappointments. So if you look at the kind of where the base point of swap started, 1st of January, 2-year swaps were 4%. If you now look where they are, took the rate this morning was 471 on the 2-year swaps and actually reached 477 at the end of last week. So that's effectively 3 base rate cuts priced in or not priced in or added on effectively, averaged over 2 years. So if you kind of look at where the market is pricing interest rates over an average of a 2-year period, they're predicting that 3 base rate cuts are not going to happen over an average of 2 years. So all the cuts that people thought were going to happen at the beginning of the year are getting pushed further and further out and are happening in a slower and slower period. So, all the thought about what's going to happen to inflation, when rates are going to get cut, is getting less and less optimistic. So inflation is, first of all, proving to be more and more sticky. The news around jobs is particularly good, which means there's less room for the government to maneuver, or the Bank of England to maneuver around cutting rates. And, the news, particularly out of the US again, which we tend to follow particularly, is that rates are increasingly less likely to be cut in a similar time span. So we're now sort of thinking, whereas June was likely to be the interest rate cuts, you're now probably looking at 50-50 for August and possibly likely to have just 1 rate cut this year now. So the time frame is just getting pushed further and further out. So you're looking at rates went from 444 in just before the CPI data was published to basically 477 in the space of about 3 days. So that's kind of where we've ended up.
So what does it so when you're looking at your pricing now, then how are you looking at it going forward? You think we are where we are now for the foreseeable, and you don't really see much change in lenders' mortgage rates?
I think at the moment what's happened, we had some very strange pricing last week. So we had some lenders cut rates.
Yeah.
We thought was, personally speaking, was slightly strange. I mean, whether they were pricing off swaps, 10 plus days before that, and they had funding available from previous periods they were bringing forward, and maybe they have a very long sign-off process potentially. We have a very short window from when rates become available or product funding becomes available to actually getting stuff into the market, so we can get stuff out there very quickly. So, for example, if swap rates change for the better, we can get stuff out very quickly. Equally, it means sometimes if rates move adversely, we sometimes have to change quite quickly. So we can react very quickly, which can be a positive, sometimes can be a slight negative on that side. So in terms of where we see stuff going, we think the market's probably slightly overreacted to where stuff's gone. Equally, we see inflation probably being quite sticky at the moment. So we think rates are probably going to come down, but we don't think they're going to come down anything like the speed perhaps people thought they were at the beginning of the year. So, we think long term, we're probably looking at rates somewhere around 4% is probably where we see the long-term outlook, but that's probably looking, tail end of 25 and beyond. We don't think them coming down anywhere near, where they were back in sort of, 21 and previous to that.
And so Imran, Sonia, so what are the messages to your clients now around pricing and interest rates? Is this just it's more confusion, or is there still an expectation from clients that don't worry about it, rates are going to fall? Sonia, go on.
Yes, it's interesting. I feel clients are really looking for context behind the headlines and what that means, what is the reality and what is realistic to them. I've seen who I've been working with this year in particular kind of did wait for a while to see, for things to settle down. And I think now that, particularly first-time buyers, they're thinking, look, we've got nothing really to compare it to. Let's just go ahead and see, what our potential is, whether we can afford to buy, and what that would look like on a monthly basis. So that is a positive, because they are looking at things now rather than looking into too far into the future to see what is that going to look like. But then with the conversations between, how long to perhaps fix for, upcoming remortgages, what the conversations I keep saying is that, they're like, when will rates go back down? When will they go back? And I think it's our responsibility as brokers to kind of, provide the context and say that that isn't actually the goal. When we are looking at rate reductions, we're not really striving as much as, they were great. That still was an abnormal market, and it wasn't particularly healthy. So that isn't actually the aim. And then, again, providing that context, all about knowledge and them understanding. And again, it makes them feel a lot better and gives them, it makes them feel more confident basing decisions on what they've got going on personally, and trying to time the market in a more holistic way rather than trying to guess what's out of our control, really.
Yeah. Imran, what about you?
Just sort of following on from what Sonia said, really, with regards to sort of first-time buyers, they are very much in the market to buy at the moment. I mean, I said it 6 months ago, first-time buyers have probably got the best opportunity right now to buy, but I'm starting to see investors start to come to the market now, looking to add to portfolios, because those that are sitting back were thinking, hold on, rates will drop, rates won't drop. Spoke to a client on Saturday, and it's interesting to hear from some clients who are coming to remortgage. Their sort of assumption at the moment is whichever government comes in, they're going to have 2 years of crap in the client's words. No matter what happens, we'll have 2 years wherever the rates are at the minute. So borrowers are starting to look beyond the old 2-year fixed sort of mark for a lot of them. They're starting to look at a 5. And again, looking at personal circumstances, do they plan on having children? So is that longer term security better for them? Or do they look at sort of moving, upsizing, or even downsizing? There are so many factors for individuals out there to consider at the minute. The common question is, though, when are rates going to drop? And as brokers, we're not. I mean, I wish we all had a crystal ball, and even as Peter's touched on, I can't see it happening in the next 2 years. And my sort of shtick for the past 18 months has been, I think the average will be sort of early 4s, even if rates were to drop.
That early. So where we are at the moment, that sort of early 4s. Do you get a sense that that's people have? Because people do correct their expectations a lot quicker than maybe we give people credit for. And actually, do you both get a sense that has their sort of acceptance of well, okay, if it's sort of 4.2, then that is still affordable for me.
Yeah, absolutely. I've had people say, sorry. I was going to say, I've had people say, actually, that's not as bad as I thought it was going to be. Like, oh, I was expecting it to be a lot more than that. They were kind of preparing themselves for like 6-7% So then when we're looking at 4s, even something 5, they're like, oh, that's not what I had in my head. So yeah, it's interesting.
I think there's an expectation as well, a little bit with some people that as and when we get a bank base rate cut, the swap rate's automatically going to fall as a result of that. It's already been priced in, so
it'll fall before that.
It'll fall before that, or it may even slightly go up depending on what happens, because obviously that's the expectation of rates over that period. So it's not a reflection of what happens at that point in time. It's an expectation of what happens over that period. So it's not necessarily going to happen like that. So it's a kind of a misunderstanding of kind of how swaps are priced, really.
It's quite interesting, that point. Go on.
Like Peter touched on earlier, around certain lenders pricing with 10-day-old swaps, really, and it's making clients understand that look, rates are the rates at the moment. So predicting the future for our clients is becoming, it's not our job, but it's going to become a lot more difficult if the media starts to go into the hyperdrive around rates, because whenever there is a base, like you mentioned, automatic assumption for someone that may have watched the news 2-3 weeks ago, for example, is, oh, rates will drop now. Let's speak to our broker. That isn't always the case. And I think as brokers, that's our job to sort of get out there and educate the borrowers and our clients, really.
Just a reminder for those of you watching or listening, any comments or questions, please put them in, and we should love to hear your thoughts as well around all of this. I've just actually got the latest swap rates up. Peter, you'll be delighted to know that they have fallen slightly so far today. So about 5 bips down, 5 year money. So you never know. We live in hope. But I find all that, it's like that behavioural economics of people anchoring themselves to different rates really interesting, and the fact that, as you said, people were expecting 5-6%. They still remember the days after the Liz Truss debacle, and oh no, rates could hit 6%, and that really sticks in their head, that bit. So actually, when you're presenting them with rates at low 4s, you're right. It's I find that fascinating, that behavioural economics of it all. Where are we? So yes, that's going to play out over the next few months, and I think everything really now is all about the general election, and I've already heard this, which as I said in my intro, I think is pretty extraordinary, where I've heard stories of buyers deciding to wait and see what the election brings before actually going ahead, because that just sounds really crazy to me. I don't understand why someone would wait and see what a new government is going to bring, because they're not suddenly, in my view, a new government coming in. If you're a new government, you know you've got 4 or 5 years, so all the crap you need to do has to happen at the start. So all the and any new government coming in needs money now. So it's unlikely that a government's going to come in and suddenly cut this, cut that, and it's going to be all sweetness and light in the housing market. So if I'm looking at buying now, I'd want to do it before the election rather than after. What are you guys seeing in that respect, Imran?
I'm seeing a mix, actually. Like you mentioned, some people wanting to sit tight and wait until after an election. But over the weekend, I've had a pickup in inquiries really from first-time buyers deciding, right, we've had enough, we're going to buy now, because, like I touched on, I think everyone's assumption in the market is property prices were going to drop for a lot of people. There was experts out there saying that they're going to drop. That hasn't happened. Rates have sort of stabilised. Yes, I know we're seeing a bit of bouncing around in the market with lenders constantly repricing. But for first-time buyers at the moment, they're thinking, we need a home because rents have gone up, utilities have gone up, and food costs have gone up. So at some point, people are going to have to buy. And the longer they wait, I've not seen in my area anyway, property prices slide as big as some of those predictions were. And in certain pockets, they've gone up. So those that have waited post-Liz Truss and now paying upwards of an extra 50,000 on a home that they could have bought for 50k less, and borrowing that extra money now at the sort of mid fours is going to cost them a fair bit more than had they borrowed it at 2%, for example. Early after effects of Liz Truss's famous budget.
Sonia, what have you seen? Are you starting to see some election talk?
I haven't yet, but I am anticipating it. I kind of echo, what Imran's saying about, it's really important to kind of get the message out to clients and prospective borrowers and buyers that not trying to play the market. We've seen it before with COVID. So people have had their opinions of what's going to happen with the market. There was false economy branded around, and people were anticipating some sort of crash. And then of course we then had Liz Truss, so then interest rates went really high. So it just goes to show we can never predict what's going to happen. And I feel like it's really important us as brokers to, and Imran said about educating people on how to make these kinds of decisions, because I do also feel like sometimes people feel like they should be looking at markets, trying to gauge what's going to happen, do their predictions, and that's the way you make decisions. But actually, of course, you can have your opinions and your thoughts and feelings around it, but that is something that we can never fully predict. And we don't know what's going to happen from one moment to the next. So it's like taking those into consideration, yes, but also really focusing in on, what is going on for you. And if now you can afford it, you've got your deposit, or, you've got things in place, we've looked at affordability, it's all lining up positively, then if it feels right to you, then now is the right time. And, potentially delaying it could impact, impact things. So yeah, it's tricky. People don't really know what to do for the best.
Hindsight's a wonderful thing, isn't it?
Yes.
Massively. And like you touched on, any new government that comes in, they're going to do the messy stuff, especially if it is a new government and a different party that comes in after 14 years of the current sort of Tory reign. They're going to do all the messy stuff at the start, just because it kind of gives them not as much repercussion, if that's the right word, because they can kind of blame it on the outgoing party. Dare I say, for first-time buyers, could we see stamp duty thresholds changed? All of a sudden, just because they need the extra revenue that every government needs that comes in, that could be one of the quickest changes that somebody could make, because at the moment the market's not super buoyant, as one would say. could that be an easy win for any new government that comes in to collect extra cash? Really?
Yeah. As some people forget that actually the current first-time buyer stamp duty that is due to end next. I think it's March, isn't it? I think.
Yeah.
So it's not in perpetuity. I can't even say that word.
In perpetuity.
That's what I meant. I'll blame it on my illness. Yeah, it's not forever. I could have just said that. That's easier. It's not forever, is it? And so that might be something that they think, well, actually, when it comes to an end, we'll just let it end naturally. So stamp duty savings first-time buyers could go up. It's a really interesting thing. From your point of view, Peter, do you hold out much hope that a new government will reinvigorate the housing market? And what would you like to see as both personally and as a lender, I guess?
I mean, I think the interesting thing from both governments, I think, is housing's not been mentioned. I've not really seen housing mentioned as either an election campaign agenda item for either of them. I mean, normally, you get some wacky idea about 99% mortgages or something coming out to woo the electorate, and it's, if you put on the the manifestos coming up, I've not really noticed it. So I mean, the big thing that's really needed, I mean, we can talk about changes to stamp duty and stuff like that, but I mean, I think they're kind of tinkering with the mortgage market, really.
Yeah,
I mean, the big really needed is building some houses and getting some changes to the planning system. And everybody kind of looks at it and realizes and goes, well, that's a bit hard. That's going to be a bit challenging. And that's going to, mean, causing some challenges with local authorities and the NIMBYs out there. And, I mean, we still don't manage to build more than about 250,000 houses a year, where France builds 500,000 a year for the same population. And we still avoid this challenge year on year. We're missing at least 3 million homes that we should have built over the last 30 years. And everybody kind of looks at the floor and just kind of, looks at their shoes and sort of avoids the issue. And somewhere along the line, someone's going to have to address this, and probably address the fact we haven't got anybody to build them either. And each party just doesn't really want to address it. I mean, the Lib Dems actually have got it in their manifesto, I think, somewhere in there. So that's the big thing I'd like someone to actually talk about at some point. Houseful, the Zoopla guys talk about it quite a lot. If you look on LinkedIn, they talk about the fact there's a lack of affordable rental stuff, lack of social housing, lack of decent properties for first-time buyers to buy. This is the real reason why house prices are so high. We just don't build anything. So that's what I'd like to see. But anyway, that's my little rant over with. So
that wasn't a rant at all.
Well, felt like a bit of a rant, but I mean that's the real underlying issue, which kind of drives a lot of the problems. And the government's come in with these kind of tinkers about let's help first time buyers with this little scheme about giving them a bit of a discount or stuff like that. But the fundamental thing is there isn't enough property for them to buy, and we have to kind of try and find another way to give them a discount or a leg up into the market, because there isn't enough property for them to buy. That's kind of the problem. Yeah,
I do think a new Labour government will try and focus on the social housing area, because that's been criminally underfunded, and that's causing loads of the issues, because you've got people who should be in social housing in the private rental sector, and the government's paying millions and millions a week on that. But it's whether or not they also then, by doing that, start to hammer the buy-to-let private rental sector even more, which is a worry. Which they should
end up with rent caps. Yeah, and then you end up forcing private landlords out of the market is the problem.
Which causes problems in itself. Yeah.
Exactly.
Again, like you said, I think now whoever comes in, whichever government comes in, we need a housing minister that actually doesn't use the role as a step up. And actually cares about housing, because it is very much a merry-go-round sort of role for any government, especially in the past decade. What have we had? 8 housing ministers, I think. 8 or 9.
Yeah,
17 housing ministers in 14 years we've had.
Yeah, it's crazy.
Yeah.
You can't then have a stable housing market if the minister keeps changing. But I agree, we do need to build a lot more, firstly, affordable homes, because, again, depending on pockets of the country, £500,000 on a new build just doesn't work for first-time buyers or single parents. That's got maybe 1 or 2 children trying to buy. Just again, I don't know on what planet a single parent could probably afford a £500,000 home with 2 children that they've got to probably pay childcare for as well. And a myth that seems to be put out there is that brokers benefit from higher property prices. No, we don't. I think we'd be busier if they were lower, because there'd be more activity in the market, because people would upsize quicker. All of a sudden, I don't know about yourselves, but I'm seeing clients live in their homes a little bit longer. 7-year used to be the average. Now it's 13 before people look to move. Mainly down to stock. And like Peter mentioned, I think Help to Buy equity loans were a bit of a silly scheme, to be honest. It was a great way for the government to sort of profiteer and builders to profiteer, really, because when something's intrinsically linked to house prices, what does that do? It's going to only increase them. It's not going to reduce them in any way. Yeah. That's my rant over.
Well, I've got loads of different rants, but one of them is that bollocks that brokers want higher house prices, or even actually they want higher house prices. No, we don't. The market doesn't. What we all want is higher transaction levels, because the more transactions, then we all benefit. Clients benefit, brokers benefit, estate agents benefit, builders benefit. It's all about transaction levels, not artificially keeping house prices higher.
If house prices maybe... Sorry.
Oh, no, go. You go, Imran.
I was going to say, if houses were 4 times people's income, all of a sudden there'll be a lot more transactions happening, because house prices will be in reach. I sort of butt heads with the boomer generation occasionally, where they bought a property for the same price of a used car now. Average house prices may have been 20,000-30,000 for those that are in their late 60s, early 70s now. But that was maybe 1.5 times income, push it 3 times income if they were the far north. But now it's about an average of 10 to 15 times income. The multiple needed. It's just unbelievable.
The other thing I think the government, and it's not appreciated or not particularly understood, is the impact housing has on social mobility.
100%.
I think the other thing it's causing is a massive division in society between young and old people. You're getting a big have and have-nots, and you're seeing it in a generational divide between the older people who are basically going, well, I'm in housing, I've got my nice secure housing, and I'm trying to stop, effectively, particularly in a lot of the suburban towns, stop development, stopping building happening. And it's effectively between those people who've got secure housing, trying to stop developments occurring, and the younger people, or the younger generation, who don't have anywhere to live, don't have access to affordable housing, where developments need to occur, social housing needs to occur, and it's effectively being blocked by the older generation, who basically don't want to see it occurring. And you're getting almost a generational divide and a generational issue occurring here. And you're stopping movement of labour. You're stopping it's causing problems with affordability of labour as well. So, London and the southeast has a labour problem, has a cost of labour problem, and it's essentially down to housing. You try and get any affordable rental properties in London and the southeast, it's an absolute nightmare. It's stopping mobility of labour, and it's causing long-term societal damage. I feel that's how serious it's getting, and it needs to be seriously addressed.
Massively. It affects mental health of the millennials, the Gen Z, or whatever you want to call it. If I've got certain clients in the southeast and southwest who are on close to 6 figures a year, and they're like, look, we've got no chance of buying a home around here. And you sat there thinking, hold on. I mean, the sort of one of the examples I'd ever seen was, to live in Fulham today in London, you need to be a millionaire. But back in the 60s or 70s, you could be a postman and live in an area such as Fulham. So the need of income and the gap between income and house prices is massive. And again, like Peter touched on, we're just not building enough because of, I personally think, a broken planning system, really. That's if any government that comes in now, if they're going to change something, to change the planning system. And target builders said, look, if you've got land we're planning on, you need to start building, or we do it ourselves. I mean, the councils or government steps in and starts building their own affordable homes.
Sonia?
Yeah, no, completely agree with everything that's been said. And I think as well, with first time buyers, home movers, anything, it's not just, with the house prices increasing, obviously, that also then extends that the deposit is needed. Not just the deposit, there's also stamp duty. So I've had first time buyers who live in London. They work in London, their life's in London. They have saved themselves a hefty sum of deposit, not being gifted. It's savings, £60,000. But then what has been forgotten is stamp duty, and they're looking at like something like over 20,000 additional that's needed. So there's so many different elements to it, and I feel like there is, like Peter said, a generational divide. I feel like younger generation can be quite misunderstood, branded as entitled. But if you want to live in London, just go look somewhere cheaper. Well, even outside of London, people cotton onto it, and outside of London areas, that's increasing as well. And also, why should they not reside where they've always lived? And there's so many layers to it.
And touching on that point, Sonia, it makes other areas of the country more expensive then. Because if people are moving further up with a London salary, for example, pockets like Grantham or any place with a 1 hour train link to London, what are those people average salary or below average salary in that area? Because it's basically a massive rise in property prices. How far north can they go, before they end up in Scotland? It's one of those scenarios. And it again comes back to that situation what Peter touched on. We're just not building enough, and it's been a glaringly obvious problem for years. And I've always said, why don't we have apprenticeships back in schools? Because not everybody is going to be a doctor or a mortgage broker or someone that designs mortgage products, but we lack joiners, builders, electricians. We lack that.
I tell you what, getting into a trade nowadays, like a Sparky or a plumber, you can write your own ticket. You can earn a fortune, can't you?
Pretty much. I know a Sparky.
Absolutely.
Now next January, no chance of getting out to anyone. And they charge what they like now, really, which is good.
But to quote Kevin Costner, "Build and they shall come."
Yeah, exactly. There you go. Love that. I'd like to see some different thinking. Maybe people have said before, maybe there's a chance to actually really completely redevelop things like stamp duty, maybe make the seller pay it, maybe than the buyer. I'd like to see first time buyers never pay stamp duty personally. But maybe there's a different way of doing it. Maybe even nationalize a house builder. If you want to build not for profit and to build affordable social housing, then take control of it, do it yourself. Go on, Peter.
I'd say there's quite, if you read some of the literature out there, there's quite a lot of stuff out there about different ideas, particularly around building social housing, about allowing local authorities to buy land, giving them the right to buy land at discounted prices and build for profit. And there's quite a lot of different thoughts around how it can be done. So I think there's quite a lot of thinking around how to do this type of stuff. So there's ideas out there. It's just having the political will to do it, and being able to tackle the Town and Country Planning Act. So our planning legislation goes back to 1947.
Yeah, that's right.
The aftermath of the Second World War, basically, and we're the only country in the world where planning is discretionary. So you basically can have one development next to another one where one gets accepted and the other one doesn't. Basically on the discretion of a local planning official who decides he doesn't like one and he does like another. And it's purely in the hands of whether the neighbours object or not, which is arbitrary, basically.
Yeah. Imran, you got a vote here for housing minister in the comments.
Oh gosh, I'm not. I mean, Lewis, bless him, would laugh, but I'm not that into politics. But I just think being part of that generation where we would buy a car that cost the same as what our parents paid for a house. You sat there thinking, bloody hell, there is a problem here.
Yeah.
You know,
Yeah.
I always
So
think
that's interesting, actually, because I want to come on to house prices just quickly, because I know there's currently there's a couple of Twitter debates raging around from the normal muggins saying that house prices are still going to crash 20-30%. But we're not seeing any evidence of any downward pressure on house prices at all, are we? As a lender, Peter, it's not something that you're worried about in terms of that.
No, I mean, I think so. You have to look at house prices in the context of inflation. So they've gone down in certain areas and certain type styles. So there's been a sell-off of some of the lower quality buy-to-let type stuff. So the sort of 1-2 bedroom buy-to-let stock, some of that's been sold off and some of that has got discounted. And by certain areas, so property, when there's kind of a static market and a slight fall, doesn't fall evenly. So the market's never one market and it's never one price, even when the market's going up. So you can't look at prices and say prices go up or prices go down. So there has been a slight fall in the lower quality, smaller size type properties, so flats, for example. Some of that has gone down in certain areas, but your better quality 2, 3, 4 bedroom houses in nice areas has been going up slightly. There's a flight to quality. So good area property is in massive demand. There's a shortage of property out there, as we all know. So if something good comes on the market in a decent area, it's going really quickly. Stuff is going to sealed bids, I'm seeing. I speak as a person who's just exchanged on a property. I found it immensely difficult trying to find somewhere. I got outbid on stuff. I got outbid on a sealed bid, which I found incredible. So the market is at least flat and in some areas is going up by bits. The other thing is interesting as well is when you look at the effective inflation. So even if you think prices are flat, wage inflation has probably gone up in the last 2 years by at least 10% plus. So houses in relation to wages are probably down about 10%. I know you're looking at obviously affordability as well when you take that into occasion, but people's relative buying power has gone up by 10%. Okay, you have to discount that against the fact that obviously mortgage rates have gone up by X%. But
yeah.
And then the other thing to take into account, as you guys as brokers will know, is people have kind of put off the decision, or a lot of people have put off the decision for a year or two. And I think a lot of people now are going, I can't keep putting off the decision. I'm now going to go for it. Things are probably aren't really going to change that much over the next 12, 18 months. I'm just going to go for it now. And I think a lot of people are getting to that decision-making process now of just saying, yeah, I'm just going to buy a house now. Forget it. Houses aren't going to go down. They're probably going to start going up again now. I'm going to start buying. That's what we're seeing.
Yeah, massively. And that's what I'm seeing. Is people have put off, having families. All of a sudden, people are in them. I mean, I'm a old dad, to say the least, and that is causing issues later down the line because as the millennials get older, there's less younger people to come in and fill the void of jobs. So yeah, I mean, it's a knock-on effect on everything. For when people settle down. I am seeing a reduction in the crap quality stock, if I'm being honest. The stuff that's really run down, just housing associations in our local area are starting to offload that stuff, which is being purchased by private landlords and turned around really, really well. So it's massive issues that any government that comes in now has to address because it's all linked to housing and it all has knock-on effects throughout everyone's lives and how they can plan for the future as well. Which then we don't really feel the effects I feel for at least a decade. And then all of a sudden, we see a glaringly obvious problem which could have been solved early on. So, yeah, build more houses. That's something we'll all agree on.
Yeah. So I just want to change tact and maybe put Sonia and Imran on the spot a little bit. But anyway, there's been a lot of talk at the moment around brokers and broker fees and stuff like that. So I've lost my question. Where have I put my question? So here you go. So how do you guys value yourselves and value what you do as a broker, how do you put that across to your clients?
Ooh, interesting question. So yeah, I charge a broker fee. I always have charged a broker fee, and the way that it is positioned, I basically explain to the client everything that I do. So it isn't just a case of me going on a broker version of a comparison site, shall we say,
absolutely,
and just like selecting something and sending it over to them. Our jobs are so involved. And basically, yeah, I kind of walk them without it, being overwhelming to them. I basically talk them through how we're literally there every step of the way. It's not just based on, the facts and the figures. I really want to get to know them as people, what they've got going on now, what their kind of plans are for the future, a little bit of an insight into all of those things, which I think are extremely important when making, basing decisions on mortgages. And basically work with them and just highlight everything that we do as brokers. And I think it is really important that brokers do value what they do. And I've not ever, touch wood, have had any kind of, kickback or to say I don't think you should charge or anything like that. So it, especially in the last few years as well, I think there is so much pressure on brokers. I know broker burnout is a huge talking piece as well, and rightly so. And I think we should, brokers should stand firm if you do charge a fee to continue to do so.
Good.
Yeah. I think this is coming off the back of, I think, some of the lenders starting to insist on how large a fee brokers charge. Again, I see the pros and cons of it from both sides, from the lender's perspective, but from a broker perspective, it's a real kick in the proverbial. That lenders telling you what you can and can't do with regards to fees that you charge. But I think the majority of brokers, anyway, wouldn't even hit the threshold.
Yeah, that's right.
Pounds. I think most brokers in the residential market are all under that figure anyway, unless they're super specialist. But yeah, I mean, for me, it wasn't that much of a concern, but I do feel it's a bit cheeky coming from lenders to say, yeah, this is the max you can charge and this is how your business operates. That's how it's been perceived by some, which I do agree with. Lenders are charging bigger product fees than ever before. If you look at some of the buy-to-let products on the market, 7% fees, 3% fees of the loan amount. It can, for brokers, it can seem like a smack across the knuckles when, again, we're struggling with broker retention, I think, across the market. Anyone young now, would they really want to be a broker for what we're actually paid? Probably not. They're probably more money selling windows, if I'm being honest, or solar panels. And it's such a heavily regulated industry as well, and costs of trading are going up. Renting offices isn't cheap. Own everything. It's all.
So how do you put that across to your clients when you're justifying what you?
Yeah. So for me, I mean, for me, it's I've always thought I've undervalued our service, to be honest. Being independent, being sort of a single advisor practice with just someone that helps out with admin and socials. Yeah, I mean, I always get told off that we undercharge for what we do, but that's purely because I love what I do. I think that's the trade-off for me, because I love what I do. It kind of, the knock-on effect is I'll keep doing it because I enjoy doing it. But yeah, I mean, we only charge a fee of, I think, £500 on offer. Yeah, that's what we charge. We're taking a hit if a property's downvalued. We're not getting paid. Neither here nor there. But like I explained to my clients, there are many other business models out there, but go with what broker you like I think it's the biggest one. For me, a lot of my clients come to me because they want that personal service. They want to be able to WhatsApp someone or fire over a voice note. And I think market knowledge is a big one, more than anything else, and also knowing your local area more than anything else. Clients will value that. Fee-wise, I think that debate's going to be, we can have that debate till the cows come home, because there are businesses that don't charge fees that probably deliver a great service anyway. And then there are others that charge massive fees who can be shocking. You know, there is, you know, good and bad in sort of both business models, really. You know, because like we know, the lenders, for example, you know, one could have the lowest rate on the market, but it might take you 60 days to get the application assessed, or you could have a lender that's slightly priced slightly higher, mortgage offer out in less than a week. So the same sort of applies for brokers, really. We are part of the intermediary market. There are intermediary lenders as well. So it's just, I think for us, providing value to clients is really easy to demonstrate. Just be on the end of the phone, especially now when clients are panicking. And I think the fee becomes less relevant to clients once they know they've got you. Once they've used you, as long as you've delivered a great service and they like you, I think that's the biggest thing in our industry, that people, especially when I see it from a recruitment side of things, our roles are kind of pictured like you'll earn this amount of money. I think that's the wrong way to go about it. I think it should be, do you enjoy helping people? Yes. Okay, this could be a role for you, and you'll earn some money off the back of it. Not this is what you could earn. You might be an absolute shyster, but we'll get you in because we think you're great at selling to people. I think that's the wrong way of recruiting into our industry. I think it's now because we're seeing those same people leave the industry. It's got slower.
I think that whole topic is an interesting actual, maybe standalone one of these to do. So Matt, if you're watching, we could maybe do something on that. I know Sonia, you're involved in like the D&I stuff, and actually you, Imran, and loads of others, are testament to, you know, young, diverse people who can really make a difference and are welcomed into this industry and are adding massive value.
10 years, hey, 10 years, 24
10 years. You don't look old enough.
Your grey hairs, the camera's working.
True. So it's a very different question for you, Peter. Is it from MPowered's perspective, and I won't put you on the spot around broker fees and all that. It's just really from you as a lender. Are you happy with how you're perceived as a lender at the moment? Have you got any exciting product plans in the future? Are you where you want to be on your journey? What does the next 6 months look like?
I think we're growing quite rapidly at the moment, so we're still in a growth phase. So we're a new lender, so we're growing quite rapidly in terms of volume. Last sort of 3-4 months, the volumes increased quite rapidly. So we've been very competitive on our rate. That's meant a lot of growth in terms of volume. So we're expanding our capacity quite a lot in terms of ability to do more volume. We're looking at a number of changes on our products, which I probably can't go into in too much detail because I'd have to kill you all and all the people listening. Some of those might be announced next week. So watch this space. So we're going to make some changes there. So you're never satisfied. So I think that's probably the thing we're looking to change. So obviously our system's new. We continue developing our system. Our system is in-house, which is probably unique to all the lenders. That's entirely developed themselves. That's continually being iterated on. So we're trying to do everything faster and faster and faster. We're doing some mortgage offers. We did one the other day in 16 seconds. So that's from receipts to formal offer, and that's not an offer subject to. That's an actual mortgage offer.
Yeah, wow.
One in 16 seconds. And we're trying to get more and more stuff into that position where case comes in, we verify everything, and we issue the formal mortgage offer at that point in time. So we're trying to do more and more stuff like that. So that's kind of the route we're trying to go down, and trying to verify everything at point in time, and push as much stuff as we can through AVM where we're allowed to. And just kind of looking at all the pinch points in the mortgage journey, and just trying to do all those things basically.
Good, like it. So we're sort of out of time now. It always goes quickly. So any last words of wisdom in like a couple of sentences, Imran?
We need to build more houses. That's what I'm going to say.
There you go. Sonia?
For brokers, I would say help your clients or prospective clients. Get context behind the headlines, make them feel less scared.
Nice. Peter?
I think interest rates have peaked, but I'm not necessarily sure they're going to come down that quickly over the next 12, 18 months.
Okay, there you go. Thank you very much, all of you. Thank you, Sonia. Thank you, Imran. And thank you, Peter. As you know, we have started shouting out a Star Broker of the Week at the end of each webinar. So please tag MPowered on socials when you've seen a broker go above and beyond. And the shout out and big hello is to Star Broker of the Week, Laura Smith. Hello. From Derbyshire Mortgages and Protection. Laura's delivered 5-star service by meticulously supporting her clients throughout every step of the mortgage application, liaising with conveyancing solicitors, handling insurance options. Her comprehensive approach helped simplify the process for her client, helping them secure their dream home faster. So well done, Laura. We are now bi-weekly, so there's nothing next week, but we will be back the week after, I think, with an election special. So we'll go into as much detail as we can around some of the policies and what the effect a new government could have on all of us. Finally, remember you can listen to all of these on Spotify. All the podcasts are available there. If you've enjoyed this, I've been Andrew Montlake. If you haven't enjoyed it, I've been just another Tory MP saying they're not going to stand in the upcoming election. Bottlers. Until next time, have a great week. Bye-bye.
Bye.
Cheers.